get more on China's property market. Qing Wang is Morgan Stanley's chief economist for Greater China and joins me here in Hong Kong this morning. Qing, thanks very much indeed for coming along. Is it a bubble? I mean, or is it the case that we only know that we're in a bubble once the bubble bursts?
Well, the property price in some major cities in China has indeed increased very rapidly since late last year. And this is not sustainable. It's in that context the Chinese government has introduced some austere measures.
Isn't it the case that to be dealing with it, you have to raise interest rates, really?
I think a key reason for sustained upside pressure on asset price in China is low interest rates.
Yeah, but it seems like that they're just tinkering around that without actually wanting to make that monetary policy measure.
Well, there's a dilemma, from policymaker perspective. The overall economy is still recovering, and there's still enormous uncertainty facing Chinese economy.
Come on, 10-11% growth is not a recovery. That's just powering ahead.
We are looking like a year-on-year GDP growth, but if we look at sequential growth, it's strong, but not particularly strong. And that's why they need to strike balance. On the one hand, they want to sustain recovery. On the other hand, there are indeed some pocket of bubbles. That's why they prefer regulatory policy measures to tackle specifically at the property prices bubble.
Let me just get you comments coming from a Bank of Communications analyst saying, so far the property tightening measures are mainly cooling transactions rather than prices. Goes on to say a property tax is the other shoe that is yet to drop.
Well, I think property tax or some sort of property tax could be introduced in few cities as on a pilot basis. But we should not call it property tax, strictly speaking, because they should be considered as some special consumption tax to penalize those folks who buy large-size apartment, very expensive, but do not use them as a primary residence. Main purpose
Get rid of the speculators, basically,
exactly.
Is what we're talking about here.
Exactly.
Now, just give us a view. If the Chinese property market has a hard landing, does it take the rest of the Chinese economy down with it?
Very good question. I think we look at this, and in fact, it turned out the construction activity for residential property in major cities where the speculation are more rampant, their share of overall construction activity in China is not large. For instance, the 35 largest cities in China, the construction activity for residential property only account for 15 to 16% of overall construction activity. Therefore, we think the concern that Chinese policies, austere policies against property sector will cause a hard landing of fixed asset investment.
So you think there is going to be a hard landing and the bubble is going to burst at some stage?
No, I think that concern is overdone because overall construction activity is not that important in major cities. We think the policy measures will cause slowdown in property construction activity in major cities, but not overall fixed asset investment growth.
The thing is, consumers, what about them and those people who are actually the ordinary middle class in China? Aren't they overstretched with their mortgage payments as well?
In a way, yes. But at the same time, Chinese folks has a very high saving ratio. So they use their saving to convert them into fixed assets. So that's another reason why there's such strong demand for housing because saving is high and interest is low.
Right. Okay. Let's just talk about what happens with the equity market and the housing market as well, because as we've seen, house prices continue to rise. The stock market's fallen. Is that necessarily this disconnect between the two now that people are seeing real estate as a way to make money and the stock market after the declines that we've seen as somewhere just to stay clear of?
Indeed, a key reason for sustained asset price pressure, be it stock market or property market, reflect there's abundant liquidity in the system. So in 2008 or 2009, when risk appetite is low, people put their money in the property market. And now with the new measures, property prices may come down. People will wonder where all the money will go.
Qing, thank you very much indeed for joining us. Qing Wang there. He's from Morgan Stanley. He's the Greater China economist.